Alright guys, welcome to a brand new video. Finally, we are done with the introduction to what foreign exchange trading is all about, and we have covered the basics of getting started with trading the foreign exchange market, talking about things like how to set up your MT4 and or MT5, talking about how to set up your trading view, talking about how to create a trading account, talking about how to navigate these platforms. Okay, so right now we are about to get into more serious business, which is technical analysis. Right now, technical analysis is the way you analyze the market and how you come to making decisions in the marketplace, whether or not you're going to take a buy position or a sell position. Okay, now within technical analysis there are a lot of things we're going to cover, and I'm going to be breaking down these concepts one after the other, and hopefully at the end of the program I'm going to put all of these things together and everything is going to make sense. So without any further ado, man, let's jump into the PC right now. I have a lot to show you guys and I promise it's going to be a lot of fun. Let's get to it right now. All right, guys, so welcome to the video. And in this video, like I said, we're going to be going over technical analysis. And within technical analysis, there are a lot of things that we need to talk about, right? But a very good starting point for us right now is what you are currently seeing on your screen right now, okay? So what is technical analysis and what questions do technical analysis answer? Why is there a need for us to do technical analysis in the first place? What is the importance of technical analysis, right? Can't we just, look at the market and decide whether or not to buy or sell just based off of like how we are feeling, or, can we just randomly decide to buy or sell if we feel like, is a good price? These are the questions that technical analysis help us to answer, and some of the things that technical analysis help us to avoid, right? Without technical analysis, we are going to make very, very ill-informed decisions in the market, talking about whether or not we are going to buy or sell, when we are even going to buy or sell, or how we are even going to buy or sell. So technical analysis basically answers the question of what to do in the market, when to take that particular action, and how to take that particular action. Okay. Again, technical analysis answers the question of what to do in the market, right? Like when you're looking at the market and you're saying to yourself, like, what am I going to do in this market? You're talking about whether or not you're going to buy the market or whether or not you're going to sell the market. Okay. Because talking about trends, we understand that the market can only be going to either the upside or the downside. And of course, what we know about trends is the fact that whenever the market is trending to any direction of the market, we want to be trading in that direction of the market. So definitely, if the market is bullish, we want to be buying that market. And if the market is bearish, we want to be selling that market. Now that you know what you are going to do in the market, when are you going to take that particular action? It's also through technical analysis that we are going to determine when is the best time for us to take that particular action. And by when, we mean, of course, the best time, because there's a time factor to it as well, where is going to be the best area or the best zone or the best price point. Okay, that answers the question of when are we going to be buying? When are we going to be buying? Okay, now the last question that technical analysis answers for us is how. Okay, how are we going to be entering the market? What confirmations do we need to see before we, decide to enter the market? Okay, and apart from the confirmations we need to see before we enter the market, what's going to be the mode of our entry? Are we going to be entering based on instant execution, or are we going to be entering based on pending orders? Talking about things like your buy limit, buy stop, sell limit, and or sell stop. Okay, so these are the questions that technical analysis answers for us. Now, to break down technical analysis, we're going to start picking these questions one after the other. And the first one we're going to talk about is the what. Okay, so I'm going to go to the next slide. Now, the what. Okay, the decision to buy or sell the market can only be gotten from the market itself. Just like I said about trends, whenever the market is trending to any particular direction, we want to be trading in that direction of the market. So what you can see here is a depiction of a bullish market, a bearish market, and a ranging market. Okay, so when the market is bullish, we know we want to be buying a bullish market. There's no reason for us to be selling in an uptrend or in a bullish market. Okay, now when the market is bearish, it means the price is descending. There's no reason for us to be buying in a downtrend, right? The most highest probable scenario is for us to be buying in an uptrend and selling in a downtrend. Now, of course, when the market is ranging, since the direction of the market is not so clear, in a ranging market, we typically want to stay out of a ranging market, right? You don't want to touch a ranging market. You don't want to trade a ranging market because you can be caught up in a range trying to buy the market and the market is still selling, or trying to sell the market and the market is still buying. The best thing that you're going to have to do is to wait for the market to break out of the range. Once the market breaks out of that range and you start to see clear signs that the market is going to either direction, that's when you now want to start getting involved. Okay, so again, the decision to buy or sell the market can only be gotten from the market itself. If the market is trending to any particular direction, we want to be trading in that direction, okay? Now, for a bullish market, we're buying, bearish market, we're selling, and a ranging market, we are doing nothing. Now, when the market is either buying or selling, there is a way the market is being presented to us. There's a way and nature, the market is being presented, right? We can see certain, movement of price in a certain way. We can see the nature of certain movement of price, basically. So the nature of the movement of price is what we refer to as market structure. So if the market is trending to the upside, the nature of the movement of price is something like this. When the market is trending to the downside, the nature of the movement of price is something like this. And when the market is ranging, the nature of price movement is something like this. And this is just based off of like general observation. This is something that every single person can see, right? Just like even in life, sometimes you reach a peak of a particular level in life and then you pull back a little bit. And the next time you're going on that run, you're smashing your old goals, you're setting new goals, you're setting new targets and things of that nature. That's the exact way of even life in general, right? If your life is bullish in general, the structure of your life will probably look something like this, right? If your life is bearish, the structure of your life will probably look something like this. Then, of course, if you're ranging within a particular point in life, then you're really not going anywhere, but you're really not going back to like where you used to be. You're just ranging within a particular, maybe salary range or like health range, whatever, but you're not really going forward, you're not really going backward, you're just kind of like stuck between a particular level, right? But yeah, when the market is moving to any direction, there is a nature of price movement. And according to the observations that we have made, the nature of price movement when the market is bullish looks something like this. And then the nature of price movement when the market is bearish looks something like this. And this is the nature of price movement when we are in a ranging market. So all of these are different types of market structure, right? This is a bullish market, this is a bearish market, and this is a ranging market. So we can as well call this a basic example of bullish market structure. And we can call this a basic example of bearish market structure, right? Now here, what we have is the observable behavior of how a trend forms in real time is what we refer to as price action. So what price is actually doing in real time. If you're watching this market move in real time, what you're going to be seeing is, these markets will move from this low price to this high price. It's going to pull back. It's going to go back up again. So this is what we mean by price action. When you're watching the market in real time, as the market is moving, you're seeing every single movement of the market. It means you're watching price action. Now, when the market is trending to a particular direction, the structure is always in line with that direction, right? You can't really have bullish markets and then you have bearish market structure, right? Or you can't really have bearish markets and then you have bullish market structure. Okay. Although when it comes to some other things that we'll talk about later, you can see how there could be a bullish trend within a bearish trend, and there could be a bearish trend within a bullish trend. But that's way more advanced. Right now, we're talking about simple introduction into market structure. So generally, this is the nature of a bullish market, which is bullish market structure. This is the nature of a bearish market, which is the bearish market structure. And this is the nature of a ranging market or a consolidating market, which is, of course, ranging or consolidating market structure. Okay. So let's now take the characteristics of each and every one of these types of market structure and break them down. Obviously, from the diagram here, you can see what a bullish market structure should be looking like. Now, where is the idea of even a bullish market coming from? Now, when the market opens, the market opens at a low price, which is this point here. Now, immediately the market opens at a low price. Of course, a lot of people see that the market is at the low price and they want to get into the market, and they indeed get into the market and then start buying the market. So from this low price, they push the market up impulsively, and this is where the word impulse leg comes from, right? Every time people see something at a low price, they are trooping in to buy that particular, item, right? They are coming in great numbers, and so that's going to cause an impulsive movement of that price from that low point to a reasonably higher point, right? So they start up what we call an impulse leg from the low price, and then they create a high point, right? Now, when it comes to trading the market and slangs and sayings which we studied before, we said you always want to buy when the price is low and sell when the price is high. Now imagine these guys here, they have bought when the price was previously low, okay, and then they have been able to push the price to a relatively high price. Now, of course, sellers are seeing the price at a high price, and there are new sellers willing to enter the market from that high price. They are willing to start selling the market. Why? Because the market is now relatively at a higher price. And of course, the buyers from here who are now taking their profits, they become new sellers into the market as well. So the both sides of sellers, the previous buyers that are now taking their profit are becoming sellers, and of course, new sellers are coming into the market. So that will cause a pullback or a retracement in price. Now, when the price is coming back down, there are other buyers who were feeling like they missed the first impulse leg and they are willing to get in a second time. So those guys create what we now call a higher low, and they will now be the ones responsible to push the price above the previously high point, which is going to cause a break of structure to the upward direction. And that's one confirmation of a bullish market. So in terms of the characteristics of a bullish market, just like we can see here, the first characteristic is the fact that a bullish market obviously is going to the upward direction. So the direction of a bullish market is bullish, or the characteristic of a bullish market structure is that, number one, the direction is bullish. Of course, you can see how this overall is heading to the upside. Now, there are consecutive breaks of structure to the upside, which is what I've just explained here. The new buyers coming into the market, their aim is to take the price higher than the previous highest price of the market, okay? Because they are feeling like if person A bought this thing at 1 naira and the value has increased to 10 naira, and then I'm seeing the value has pulled back to 3 naira. If I'm getting in at 3 naira, I want at least maybe 13 naira or 15 naira. I want the new high price to break the previously highest price. So there's going to be a break of structure to the upward direction, and this cycle repeats itself over and over and over and over again until maybe a reversal comes into play. But basically, if the market is going to be bullish forever, is forever going to be printing these types of structure. And of course, the number 3 characteristic of a bullish market structure here is that the impulse leg is bullish, meaning that the direction of the impulse leg is to the upside, but the direction of the pullback leg is to the downside. Remember, I said when we get to more advanced level, I'm going to show you how there may be some downtrend in an uptrend, and there may be some uptrend in a downtrend. It's all about knowing what leg of price you are actually trading in. Okay, so in this particular example, whereby I'm talking about the characteristic of structure, just keep in mind that in a bullish market structure, the impulse leg is going to the upward direction and the pullback leg is coming to the downward direction. Okay, now in an uptrend, we are going to be having new higher lows being created and new higher highs being created. And what do we mean by that? These points that have been circled out here. So all of these points are called structure points. Okay, all of these points are called structure points. From when the market opened, the first price there was called a low, right? As soon as that low created a high, we call that a high. But then the market pulled back, failing to come below this low. So if this low would have come below this low, that would have been a lower low, right? Because this low would have been lower than this low. But because this low here is higher than this low, we call it a higher low. So the name of this structure point is a higher low. And of course, a higher low gives us a higher high with a break of structure to the upside. Okay. As soon as it breaks structure to the upside, it's going to give us a higher high, and then it's going to pull back again, giving us another higher low. This breaks structure again to the upside, giving us a new higher high, pull back, giving us a higher low, another impulse giving us a new higher high. So here, all of the impulses are, denoted in blue, and all of the pullbacks are denoted in red. You can see blue for the impulse, red for the pullback, blue for the impulse, red for the pullback. And of course, you can see that the direction is bullish. There is constant break of structure to the upside. The impulse leg is bullish while the pullback leg is bearish. And of course, we have new higher lows and new higher highs. Okay, so now let's check out the characteristics of a bearish market structure. Now, when it comes to bearish market structure, this is the direct opposite of what we have in a bullish market structure. Okay, now imagine the market opened up with a high price. Sellers are very excited. They are willing to get into the market from that high price. And of course, they start tanking the market from the high price. Now, this high price is going to give us an impulse leg with the number of sellers coming in. It's going to give us an impulse leg, causing the market to fall lower to give us a low price. Now, of course, when buyers start to see that the price is relatively low from the first price, buyers start to get into that market. But if the buyers are not sufficient enough to push the price above this high price, then what we are going to have is a lower high, because obviously this high compared to this, or this price compared to this, is a high, but this compared to this is lower. So this is a lower high that will in turn, if the sellers are able to push the market down, break structure to the downside, and then it'll give us a lower low. Now that cycle continues over and over again in a downtrend. Okay, so in terms of the characteristics of a downtrend, we have the direction is bearish. There's consecutive break of structure to the downside. The impulse leg is bearish, while the pullback leg is bullish. And of course, we're going to be having new lower highs and new lower lows, okay, after breaks of structure to the downside. So you can see here, there's a break of structure to the downside, new lower low created. Break of structure to the downside, new lower low created. Unlike here, when we have break of structure to the upside, new higher high created. Break of structure to the upside, new higher high created. So what you want to do right now is you want to start cementing these characteristics. Okay, you want to start cementing these characteristics in your mind. Okay, start to know these characteristics at the back of your hand, because when looking at the market, all of these things are going to be playing in your mind. So you need to know how to identify an uptrend. You need to know how to identify a downtrend based on the characteristics, not just based on you looking at it and saying, well, this is a downtrend. No, you need to be able to add these characteristics to a downtrend to be extra sure, because what we're doing is technical analysis. So you have to be this technical. Okay, with some experience, it's going to come to a time whereby you don't need to mark up your charts in so much detail. But for a beginner, you want to start to, mark up your chart in detail and try to be a little bit technical about your analysis. Okay, that's why it's called technical analysis anyway. So for a ranging market condition, this is what we have. Of course, you can see from a low price, we create a high price. The market fails to come lower, and then it's failing to go higher. It's failing to come lower. It's failing to go higher. And of course, you can see a sideways movement of price action here. Okay, now the characteristic of a ranging market, obviously, there's no clear direction in the market. There's no break of structure to either direction in the market. The impulse and the pullback seem to be in equal range. And of course, there's no higher high being created. There's no higher low being created. There's no lower high and there's no lower low, because we are in a range. Okay. Now, something can happen in the market whereby a trend can change, and that's called a reversal. Okay. So trend change or reversal. Now, what you have here is at this side here, you're seeing an uptrend with the blue line. And this here, you're seeing a downtrend with the red line. Okay. Now, this trend was previously bullish, and at some point it switched to bearish. Now, I believe when you're looking at the bullish side, you can see all of the characteristics of an uptrend, right? Direction is going to the upside, new higher highs being created, break of structure to the upside, impulse to the upside, pull back to the downside. Now, when you look at this area here, you can see all of the characteristics of a downtrend, which states that, the market is bearish, right? Price is coming down. The direction is to the downside. New lower lows, lower highs, break of structure to the downside, impulse leg is bearish, and pullback leg is bullish. Now, this here is the point that the market gave us a sign that it's about to reverse. Now, before this here, you can see that the market was fulfilling all of the characteristics of a bullish market, but a break of structure to the downside is a characteristic of a bearish market. Now, as soon as this happened, we can now start to look at the market like, okay, it's possible that this market may want to, reverse, right? It may want to reverse. So at this point here, or the diagram you're seeing here, this is how the market reverses. And shortly, we're going to go into the market and look for examples to back up our thesis here But yeah, this is how the market reverses from uptrend to downtrend, and of course how the market reverses from a downtrend to an uptrend. So just like what's written here, pay attention to the change in characteristics of the different types of trend that we already have studied. Okay, now that's the reason why I'm even giving you guys characteristics of a trend in the first place. Why? Because I want you to be able to pair what you are seeing in the market to a conceptualized idea, right? This is a conceptualized idea of what a bullish reversal looks like, right? Bullish reversal meaning we're coming from a bearish market and we are reversing back to the upside in a bullish way, okay? Now, I've given you guys the concepts. Now, we're going to jump into the market and we are going to look for examples whereby, what we are studying here is directly correlated with what we are seeing in the market. So without any further ado, man, let me jump into the market very, very quickly here and just show you guys a few examples of trends, reversals, and things of that nature, okay? I really hope you guys will learn what I'm teaching here, not just, look at these diagrams here and say, well, I know the pattern, right? Because this is more than just a pattern. There is deep understanding of why these things are happening in the market from even an institutional perspective, okay? But because I'm doing this mostly for the beginners, I'm doing this mostly from a beginner perspective, right? So the approach that I'm taking here is not necessarily an institutional approach. It's more of like a logical and a simpler approach, right? With more experience, with, of course, when you start learning some of these things, when you start researching on your own, you're now going to now dive into the world of institutional perspective of some of these things. And then you start to understand from an even more technical perspective why some of these things are happening in the market right now. But what I'm trying to do right now is to give you something that is simple enough, something that you can take action with right now, something that is logical, and it's something that will force you to even think logically in the market. Okay, so let's jump into the market and let's start to, investigate the market and look for some of these things as reasonable and viable examples. Okay, so for this, I'm not going to use multiple different time frames. I'm going to be on one particular time frame. Okay, I'm going to be on one particular time frame, and I just want to show you areas in the market where we have an uptrend and the behavior of the uptrend, and areas in the market where we have a downtrend and the behavior of a downtrend. Now, I'm on the daily time frame here. Let me go to a new broker, Saxo Markets. All right. Now, let me go to the weekly time frame. Now, what we are doing here is we are just trying to understand trends. We're just trying to look at the nature of trend, if it's in line with what we, just studied so far, right? We are just trying to look at the nature of a trend. So what I'll be doing here is I'll just be picking a particular area of uptrend and a particular area of downtrend. Now, for a beginner, this is how you start to practice some of these things without confusing yourself, okay? The market is fractal in nature, meaning that if I'm on the weekly time frame, I'm seeing the same representation of market structure as the same when I go to the 1 minute time frame, or as the same when I go to lower time frames, basically. But I'm going to start with higher time frames just for you to be able to identify trends, identify the different legs of a trend. Where's the impulse leg? Where is the pullback leg? Where is the break of structure points? Where are the structure points within the trend and things of that nature? Okay, so yeah, let's look at some of these trends right now. Now, even from here, the first thing you can do to understand trends is remove your market from candlestick and just put it on line charts. Okay, put it on line charts. And now, obviously, you can start to see some of the things that we have already spoken about in terms of what a trend looks like. Now, let's take this area here from this low here. Let's take this area here from this low here, okay, to that high there. I believe you guys can see a representation of what we talked about. Now, it's not as clean as when we are doing the conceptualized view. It's not as clean as this, but I believe you can notice the characteristics of an uptrend within just this leg here. Okay, now from here, if you just start to mark out your structure points based on what you can see right now, this here is a high. This here is some kind of high. This here is some kind of low. Okay, now at this point, this structure level has not been broken. Okay, so this is where structure was broken. You can see there was a small pullback. That's a high. This right here is a low, right? There's a high here. There's a low here. There's a high here. I don't want to make this too messy. But I'm just trying to explain to you guys that you don't even need to, overcomplicate most of these things for yourself. You really don't need to overcomplicate these things. Once you come to the line chart, you're going to start seeing the same depiction of price action that we usually talk about when we are just drawing these as patterns. Okay. I believe this is similar to this if I'm not, a blind person. Okay. But yeah, that's what we mean. But taking it back to candlestick, okay, let's look for a smaller area. I don't want to use a bigger area that has more internal structure, but like, I believe you guys can see a downtrend somewhere around here. Okay, this here is a downtrend. Again, what we are trying to do here is just identifying the trend. So from that high, we came to this low here. From this low, we came to this high. From here, we had a clear break of structure here to that low. Pull back to this high here. We had a clear break of this structure to this low here, very minor low there. Oh my God, I really hope you guys can see what I'm doing right now. Then we just have this. So let me zoom in. Okay, so we had a break of structure to this low. You can see it came lower than this. That's the structure point right there. This is this high here. Again, we are only just trying to identify a trend. I'm not being too technical about this. I'm just using the swing points, okay? The swing points from the higher time frame, right? Now, if you look here, you can see we have a break of structure to the downside here. Break of structure to the downside there. We have a break of structure to the downside here. Of course, we had another break of structure to the downside here. And you can see even the ones that I didn't mark up, okay? This is a low here. That's a high there. You have another break of structure to the downside there. So you can start to make yours look a little bit cleaner than this, just because I'm looking at a very, very large area of price. That's why it's looking a little bit messy. But again, you can see this here is another massive downtrend, okay? That there is another massive downtrend. So talking about that high there, you can see how that high there created this low here. We had a pullback to this high here. The market pull back down, breaking structure to the downside. So now this is a clearer downtrend here. I believe you guys can all see this. Break of structure here. Okay. The market pull back again, taking out structure here from where? This high here. Now from that high, it took out the structure here, gave a low. Where was that low? Now, all you want to do is look for the lowest point before the pullback. Now, there's a low here. The market pulled back a little bit, but it came lower here before it pulled back significantly. So all you need to do is look for the lowest point within the pullback. Now, this point here is not my lower low, although the market sold. It's only when the market breaks a low to the downside, that's when, a lower low is formed. Okay. And that's a law of market structure. That's a law of market structure. In fact, law of market structure states that in a downtrend, this area here is not a lower high until it has broken structure to the downside. This is the only reason why I'm going to call this a lower high, because a lower high is a level that is responsible for taking our market structure to the downside and creating a new lower low. While in an uptrend, a higher low is an area who is responsible for one, taking out structure to the upside and creating a new higher high. So if this doesn't happen, I'm not going to be looking to buy this market anytime soon, right? Now, because there's no establishment of the fact that we are in an uptrend. Remember, the characteristic of an uptrend is for the market to create a new higher high. Once the market creates a new higher high, that's when we are expecting a pullback so that we can now buy the market to yet create another higher high. But once the market has not created a new higher high, there's every possibility that the market will never create that new higher high and it can just start selling from there. Not until this point here creates a new higher high, I'm not willing to buy the market. Okay? Not until this creates a new higher high, taking out this structure here, I'm not willing to buy the market. So when you're looking at this in terms of market structure, right? This low here is not your lower low because obviously it's not lower than this low, right? This low here is not your true lower low because that's not where the pullback actually, this is not the lowest point before the pullback, right? So this here is your lowest point before the pullback. So that point there is going to be your new lower low, not this point here, okay? Now, where's your lower high? Again, you have your lower high here. Now, just like I was saying, this point here is not going to be your new lower low because obviously it hasn't broken structure to the downside, okay? You need it to break structure to the downside for you to have a lower low, okay? There's no break of structure here to the downside, so that's not a lower low yet until it breaks structure to the downside. That now becomes a new lower low. So looking at this market right now, although we are on a very, very massive time frame, it's safe to assume that we are in some type of a pullback leg, and then we might have, a new lower low that's going to be created at the end of the day. Now, if I draw out the path of structure, so from this high here, to this low here, to that high there, to this low here, to that high there, all the way to this low here, all the way to this high here, all the way to this low here, it's safe to assume that we can have something like this and then something like this. It's safe to assume that. Now, again, we're going to talk a little bit more in depth about market structure in the next video when we talk about internal and external market structure, because there are layers of structure. Because I know a lot of people will start asking me, well, what is this I'm seeing here? That's internal market structure of this leg of price, but we'll talk about internal and external market structure in a later video. So for now, I just want you guys to be able to identify trends, okay? I want you to be able to identify trends based on the characteristics of trends that I've actually given you. Now, you don't have to do this on a weekly time frame. You can go to the 4-hour time frame, pick any single area of price, and just start to. Now we are on the 4-hour time frame. You can take from this high to this low and just study the nature of price action there, and you're definitely gonna get a trend from there. Okay, just looking at this, like, come on, man. So we have a high. All of these lows here where the market pulled back up, break of structure. Okay, break of structure here. And these are just confirming the fact that, okay, yes, the characteristics of trends that we have studied is actually true. Okay, so we have breaks of structure here. This is a downtrend. Break of structure here. Okay, in a downtrend, we have consecutive breaks of structure. Okay. I'm taking out different structure here. I just want you guys to be able to note that we are seeing the characteristics of a downtrend within what's going on here. Okay, the market creates a low, it pulls back a little bit, it creates a high, it pulls back, breaking that low to the downside consecutively. And of course, you can see the price falling as it's doing that. Okay, now what happened here? Okay, look at what happened here. We have a reversal from here. Okay. The market created this. And now what do we have? We now have a break of structure to the upside, signifying to us that this market may want to what? Pull back. Now, as soon as we have that break of structure to the upside, so if I draw the path of structure, let's say starting from here, high, low, high, some type of low there, some type of high. We have low, we have high, then we have low, then we have high, then we have low. Of course, we had a break of structure to the upside. We had a pullback here. And of course, we had another break of structure to the upside here. We had a pullback here. We had another break of structure to the upside here. Now, if I take this out of the market, okay? If I take this out of the market and put it on its own, this is the exact same thing that we did, talking about the characteristics of, a trend and how trends can change. This is the exact same diagram, okay? Now, although that one that we actually drew from the market is not looking as clean as this, but in terms of like pattern, in terms of like formation, in terms of like, characteristics, we can see that is the exact same thing. Okay, so this is what I mean by try to go into the market and start to identify these things on your own. Now, if this was a bearish market or a bullish market that turned bearish, it's going to look something like this. Okay, and this is me just inverting the trading view chart by clicking on alternate and I. Okay, alternate I is going to invert the chart for you. So this is looking like an uptrend that at some point changed to a downtrend. So now we started having consecutive breaks of structure to the downside. Okay, because now the uptrend has shifted to the downside. And you can now start to see consecutive breaks of structure to the downside, okay? So this is how you start to study trends. This is how you start to study reversals, okay? Now, in doing this, I want you guys to do as many examples as possible. Take screenshots of them, maybe take pictures of them, maybe even start to draw out these diagrams on your notebook so you get to familiarize yourself with most of these things. But this is how you build muscle memory. This is how you study concepts individually, and as we keep going in the course, we're going to be adding some more things to what we are doing right now, but this is basically how you study, right? So again, let me go to a different pair. Let's go to GBP USD. Now this work, in fact, let me go to a different asset class entirely. Okay, let's go to BTC USD. Now, like I said, these strategies I'm teaching you guys here, they work across the board on any asset class that you can think of. Talk about S&P 500, the DXY, talk about crypto, stocks, commodities, anything you can think of. These is the same exact principles that work, okay? It's the same exact principles that work. Now, just look at the nature of this reversal here. Oh, this is way too, let's go to the daily time frame. Now, this is BTC USD, okay? This BTC USD. Just look at the nature of price. Okay, just look at the nature of price. This is a low here. This is a low here. That's a high there. If we take this leg and start to examine that leg, I believe you can see some of the characteristics of an uptrend. Now, it might not be so clear when you do it like that, but when you do it like this, of course, you can see we have breaks of structure, pullback, break of structure, pullback. Although this is a very, very volatile asset class, that's why you can see it, going up to the upside, very, very volatile. Okay, it's very, very volatile. It's more volatile than your normal currencies, but you can still see the characteristics of a trend in there. Let me just go to another pair, GBP USD. I just wanted to show you guys that it's the same thing across the board. Now on GBP USD, just look at this beautiful downtrend here. Okay, I'm going to leave all of these for you guys to investigate on your own, but I believe just based on what we are looking at here, from this highs all the way to this low here, you can see all of the characteristics of a downtrend. Now, don't bother yourself with, oh, where do I enter the trade from and things of that nature. Remember, we are taking this thing step by step, and we are going to get to a point whereby I'm going to teach you guys how to get levels that you are going to be trading from based on market structure. Okay, my entire trading strategy is based upon market structure, and I believe I've been able to simplify market structure in a way where anybody who actually put in the time to pay attention will be able to understand. So without any further wasting of time, I really don't want to make this video too long, but I just want to give you guys the assignment of going into the market to investigate the market. Okay, investigate the market and try to see some of these things for yourself. Try to learn some of these concepts, theories on your own. And yeah, that's what's going to build your muscle memory, and that's what's going to cement your understanding. Okay, so just before we go, just look at this downtrend playing out here. Okay, from this high to this low here. Okay, if you zoom in right there, you can start to see the characteristics of a downtrend from that high all the way to this low here, all the way to that high. This created this low. Remember, this is not the lowest low before the pullback. This is the lowest low before the pullback. Okay, you can see consecutive breaks of structure to the downside, pullback, and we can expect this to continue further and break structure to the downside. Okay, we can expect this according to the law of market structure, because if we are truly in a downtrend, we have had a lower low being created, we have had a healthy pullback, we can expect the market to drop and give us a new lower low. Okay, I'm talking about the bullish side, taking into consideration this low. This here is a low, this here is a high. You can see the pullback. We broke structure to the upside, we pulled back again, right? Now we broke structure again to the upside. This time the pullback wasn't so, crazy. We took our structure again to the upside. We pulled back. We took our structure again to the upside. We pulled back. Okay. And then we went here. Now, if you look at the nature of price action here, this looks like a ranging market. Why? Because we have sideways movement of price. Okay. So from here, we have a ranging market example. At this point, what do? We stay away from the market because the market is ranging, okay? You can see the sideways movement of price and the market broke above the range, okay, and then reacted from something there and started selling. So this is what you guys need to start to practice. Let's look for other examples of a ranging market. Look at this here. This area here, you can see sideways movement of price. You typically want to avoid days like this. You want to be trading within this, okay? But you want to avoid something like this, okay? That's ranging market situation there. On the daily time frame, you can see the market range for a number of days. Trust me, a number of days is not too much for you to sit out of the market and do nothing, okay? So that's a ranging market right there. Even this kind of looks like a range because you can see sideways movement. Although overall, you can see that it was selling, but you know, in real time, when looking at this, it's not so clear. I think from somewhere around here to there, we have a ranging market situation going on there. Somewhere around here. Now, I know most of these things are not going to start making sense to a lot of people, but trust me, you need to be, you know, patient with some of these things. You just need to exercise patience. You just need to exercise patience. Trust me, you're going to understand all these things if you put in the time and if you put in the effort to, you know, actually try to understand, okay? So, yeah, you want to try to go into the market and try to identify some of these things, okay? You want to go into the market and start to identify some of these things, and it's really, really going to help you out in your trading journey. So without any further ado, I'm going to end the video here. Thank you guys for watching this video. And again, if you like the video, if you gain value from the video, please like the video and of course, subscribe to the channel, and please share the video out to your friends or anybody who you feel like the video is going to bring value for them too as well. It's going to help the channel grow and it's going to help all of us to get better at trading, man. I'll see you guys in the next video talking about internal and external market structure. Until then, it's peace out, guys. Gang, gang.